Hello and good morning, everybody. Today we're going to be covering Fibonacci expansion and extension. Um, they're both pretty similar. I will say this: the extension is like one of the coolest tools. I think it's super underrated what it can do. And I think after this tutorial, I hope a lot of you agree with me and start to use it for yourselves. So there's a lot of stuff that we'll cover on that. I'm gonna try to keep this one like really short, kind of under that 30-minute mark if I can. So as long as I don't get too carried away with what I'm trying to explain. Again, if you guys have questions, ask them as they come to you, and I'll just answer them at the end. All right. And if not, we'll just go ahead and end the stream there. So what we covered in the last stream was the Fibonacci retracement tool. You can find on the left here. For example, I'm going to do a pull. We always said left to right. And if we do from a swing high left to a swing low on the right, this would give us resistance points. So on the way up, we can see we had resistance here. We had resistance at the 618. We broke through the 618, back tested the 0.5, had a bit of resistance at the 786, and then we all know where this wound up. One of my favorite Fibonacci levels that not a lot of people use is the 886, which is pretty much where we rejected from at the top there. Okay. So this is the Fibonacci retracement tool, and this is basically how we used it in the last tutorial. And now you might be saying, well, okay, memory lock, what would we do if price were to break up above, the 1-to-1 here from our swing high that we started our pull from? What would we do then? And this is where you can start to use the Fibonacci expansion, right? And that's just a fancy way of saying, that you would expand beyond the one, and keep going up higher. So we have some preset ones here. I'm actually going to use I'll just put them on as an example, and then I'm going to go to my default one. So we'd have like the 1272, the 14414, the 1618, very important, right? And then of course you would get to the 2. And what you have to understand is that the 2, just in case I'm maybe a lot of you get this already, but from the swing low, from the swing high to the swing low is where we drew, right? And that gives us our 1, because from here to here is 1. Now from here to here is another 1, which means that this distance is the same as this distance, okay? And we'll get into that a little bit more with the Fibonacci expansion. But the idea is that you would then add these levels above to give you, again, more confluence on the chart for future analysis. And again, we use Fibonacci for confluence. We don't just count on these levels alone, but we add them to like our other forms of analysis, right? So I'm actually just going to go to mine to clear this up. I have my own template here. So these are the levels that I like to use. You're welcome to go ahead and copy them onto your template for the Fibonacci tool. I like to keep multiple templates, one for flags, my 618, the golden zone, right? The quarters that we talked about in the last live stream, my 886, and then expansion here, right? And then of course the range bound one, which we also covered in the last tutorial. So this one I would just go ahead and click expansion, and it would bring this up for me, and I can see, all right, great. If we were to break up above this level here, I can look to any of these levels as future resistance. And then of course, what did we cover not too long ago was our fixed range pull. So we can go ahead and add, let's just say we put on a fixed range pull here, and we want to take the point of control of this previous range. We can say that that point of control is about here. And the value area high is about here. And I'll go ahead and clone this and pull this down. Okay, cool. So we can see here, this is the value area of our previous range here that we know will act as resistance. And we can see, I'll just go ahead and get rid of this. If we were to, add confluence to it using this Fibonacci expansion, we could say that this zone here is our area of resistance. And look at this. The 1618 is exactly on top of, almost to the dollar, the value area high of the previous range, right? So what does that tell us? That tells us if price were to expand and continue up here, that this price zone is very key. All right, and then from here too, let's, we can look for more added sources of confluence other than just this fixed range pull and this Fibonacci pull, right? But I just wanted to give you a very brief example of what I would do, right? We took this previous value area here of this previous range, which we covered in one of our tutorials, right? The fixed range pull tutorial. And then now we can add some confluence to it with this Fibonacci expansion, right? And say, wow, look at that. We have some great confluence here. Let me draw some trend lines now. Let's see if there's any daily, weekly levels, XYZ, whatever it might be. And see if we can also get more confluence either in this area here or just generally speaking in this zone. Okay. And yeah, I can just, just to give you a little bit more clarity on the chart. You can see just how nicely that winds up. If you wanted to expand beyond, like some of these levels that I have here, I just did the 618s beyond that. If you wanted to, like these, the 133, so hang on, I'll just go ahead and get rid of this here. If you did want to expand beyond, simply all you have to do is we have the 1, 133, 1, 272, 1, 414. These two levels I actually really like a lot. The 133 so-so, but the 272 and the 414 I really like. All you would have to do is go in here and you can just add, 3272, or we have our 2 here. So if you wanted to add, you just go the 2, 272, or the 2 133, and then here we could go 2, 272, and here the 2414, and then you just you have the basically the repeat, right? The 1 133 1 272 1 414 1 618 2 2 133 272 2 414 2 618, and so on and so forth. You can continue to do this. These are just some key fibs that I personally like and have seen a good reaction off of. Okay, cool. So that's it for that. Very, very simple. I'm just going to leave it at that, right? And you can do the same for as price is going lower, all right, if you wanted to. If you wanted to do, your pull from, let's see, from, here to, how would we do this here? Go, from here to here, and we could put on our 1. So we had this move from here all the way up to here, right? The summer of 2021 low to the 2021 high. And, if we draw those fibs, this is pretty cool, right? We did from the swing low to the swing high. All right. So what does that mean? That means that from, the 1-to-1, of course, is this length here. Okay. And then if we were to expand beyond that, well, look at this. We have, and of course, this gives you support on the way down, right? So, of course, we found support at the 1, and then we found no support at the 1 133. But look at this, the 1 272. How about that? Look at this. Very well respected level, right? Even nearly back tested here. It essentially gave us our range low for a range that we were in for you know, from June to November, right? Very long time. And as a matter of fact, you know, deviated, and now we're just back in the range again. Okay. What's cool too is that we're actually ranging essentially between the 1-1-3-3 and the 1-2-7-2, and we have been for quite some time. And think about this, guys. Doing this poll, you could have done this poll if we go ahead and replay back to here. You know, you could have done this poll at this time, and of course, you probably would have wanted to add the 786, the 886, the 618, the 66, the 5, and the 382, and you would have said, okay, cool. On the way down, these are my areas of support, right? This is where I'm gonna all look for support on the way down at each of these levels with what our added confluence. We're not just gonna use the Fibonacci all on its own, right? We're gonna have some added confluence. And then we simply watch, you know, price unfold. Let's see if we can just go to a 3x. You know, we watch price unfold here and see where we get some support. So the 382, a little bit of support. Oops. The 66 and the 618 zone gave us some great support here. Flip to resistance. The 886, one of my favorite levels, was support here. Again, back testing the 618. Look at that. Wow. How about that? Look how well respected that zone is. Look at this, a deviation and a break back down. And we know where this goes, so let's see if we can get a little bit more respect on the way down with some of these levels. All right, fall through, and we find a bit of support at the 1. And, you know, of course, from there, we've already covered what happens next. We simply go down here and, you know, we essentially range, right, between the 1-2-7-2 and the 1-3-3. So again, like what's so cool about this is that you drew this here to here, and you did this in 2021, and this gave you a whole year's worth of price action, you know, levels worth of price action for you to keep an eye on and use as support and confluence on your chart. Pretty wild. I mean, that's pretty crazy to think about. Okay, so I think that is it for that one. We will go ahead and close this out. Yes, that is pretty much all I've wanted to do for that one. Now we're going to move on to a new tool. This is the Fibonacci extension tool. I love this tool. And there's another tool very similar to this that I love that we're going to cover in a future tutorial. But I love this tool, and I'm going to show you exactly why. And I'm going to show you how important and how useful it can be. So if we, why don't I just show it to you first? So if we go here, we go down to trend-based fib extension. Go ahead and click that. Well, I'm going to put my magnet tool on. Now here is the difference with this tool. You're going to do 3 clicks instead of just the usual 2. You still do left to right. All right, so I'm going to do from here, from the swing low here, left to right to the swing high, and then I have a 3rd click. All right, so what this does, and I'll show you, I'm just going to put this here at the low, and I don't know why that's my template right now. I also don't know why that's my template right now. Let's go ahead and put the expansion stand right, and that should do it. So here's how this works, all right? And this is why this tool is so cool. We drew from here to here like we normally would with a Fibonacci retracement tool, but then we had a 3rd click, and we drew that down to here. So here's what that does, is from here to here, the 0 to the 1 to 1 is the same length as from here to here. All right, so what we just did is we said, listen, I'm curious, if we were to have the same rally that we had here, if we were to have the same amount, the same push, right, the same strength, where would this rally end up? Well, it would end up at 23,098, right? And if we were to expand beyond that, where would we go to? And then that's where you can draw some of these future levels here, right? I'm actually curious if we could just go ahead and add. I do want to add 1.133. I don't know. Just change this to yeah. And look at that. Cool. So this rally ended at the 1.133 of this pull. All right. I'm going to give us, a couple other examples that I think will be a little bit more clear to you guys on the potential use case for this, okay? I'm going to switch over to log because we're going to do some, if you don't know what log is, I have a tutorial on TradingView that you're welcome to go check out, but it's not something I'm going to cover today. So here's what's really cool, all right? Let's say that I want to compare the last cycle from, oops, get out of here. If I want to compare the last cycle, the last bull run from here to here to this one, from here to here or here, how would I do that? Well, I would use the trend-based fib extension tool. So here's what I would do, right? I would draw from here, the swing low left, to right, the swing high. And then my third click, I would put at the low or the start of the bull run. All right. Oh man, okay. Do we put this back a little bit more? Yeah, let's go ahead and do that. We'll put it back here. Okay, let's see if we get some confluence on that. And no, this would actually be, let's say, down here. All right, wow, okay. So this would give us areas of resistance, all right? So we would go, let's go ahead and add. We're obviously going to want to go higher here. So the 2, the 272, the 2414, 3, and let's get a 3272. Okay. And what we're going to do, just for fun, I'm going to get rid of all these. And we're going to do a replay to, let's say, we're here and we just had the Bitcoin happening, right? And we're expecting, a new bull run, and we're saying, well, how high is this thing going to go? Well, that is where this comes into play. All right, so we can have these levels in mind, and we can say, and of course, I know what happens, right? So I have future bias on this. But we can say that if, we have this rally from our previous bull run that went from here to here. So if we had this same run, what would that look like? In terms of Fibonacci, that would put us, from here to here at 22,000. You know what? This isn't going to work right because hang on a second. Yeah, let's do, let me try something once. I just want to double check. Huh, okay. All right, so yeah, if we were to have that same, rally, we would be looking at, 1-to-1, 22,360, right? And then we can look at some extensions beyond there. So the 1, 6, 1, 8, the 2, the 3, so on and so forth. And we can look at these and say these are, upcoming resistance zones. But what I like about it is it allows us to compare, the two rallies, or at least like a potential rally, right? Because it hasn't happened yet. So we can use, why don't I just go on a weekly chart here? That'll make it easier since we're looking at some massive price action. We can use, like I said, past data to help us predict, future price action. So in doing so, let's just go ahead and put this back to 3. And we can watch and say, all right, these are future zones of resistance. Okay, and of course, what do we want to do is have added confluence, when we go about doing this. I think we are going to want this on ×10. And hopefully it plays fast enough here. I don't know how quickly this will go. All right. Damn, that's wild. Just watching that. These are weekly candles. So we had some resistance to start at the 2, right? So the 2 extension, right? So this would be the 1-to-1. This is the 1-to-2 extension, right? And that's kind of where we had our first area of resistance on the chart here. Back tested the 1-4-1-4. Okay. And we can go ahead and hit play. Had resistance at the 3. So we've noticed that the 2-to-1, right, and the 3-to-1 extensions, we did see some resistance there, right? So that's something you can say, okay, for future cycles, I'm going to look at that. I'm going to do the pull here, and I'm going to say, well, the 2 extension, the 3 extension, those are things I'm going to keep an eye on, right? Because I saw that there was resistance there in the last bull run. And then, of course, this one overextended to the 3-2-7-2. We could see held as resistance there. And then from here, I would prefer to do a new, pull. But still, it's interesting to see, how well respected some of these levels still are, right? Yeah, I mean, just looking at these levels, I mean, they're still pretty well respected. It's pretty cool to see that, I think. Just to think that these are just Fibonacci levels, right? It's not actual data, right? Like what we talked about with the fixed range volume pull tool. That is real data based on real trades taking place, right? This is a Fibonacci. This is very, I think this is more of a, theoretical thing, and it's so cool to see it's still very well respected. I mean, look at this. This is just wild, right? The 6-6 and the 6-1-8. Boom. And here the low of the range that we were in for several months, right? It actually gave us, the low of the range and the area of the back test. I mean, that is just insane. And the high here. I mean, it's just so cool to see that, right? And you could have drawn this when? You could have drawn this back here or here, right? You could have had this drawn out already, saying I'm ready for the next cycle. I'm gonna keep this on my chart and see where it takes us, right? And we can of course add lower ones too. I don't have them on here. Let's add like the 382. And again, we can still see like how well respected it was, even drawing it all the way back here. So this could have been drawn in December of 2018. You could have had this drawn, and it helped you, predict price action all the way, 5 years later. I 4 years later, I'm going on 5. That is insane. That's insane to think about that. It's crazy, right? Let's see if we can see some other things that we would want to do some comparisons to. here's another good one. Okay. So here's our last bear market rally. Let's see. Oops. I'm gonna stay on log. No. So here's our last bear market rally, right? So let's go ahead and do a pull from the low left to right to the swing high of our last bear market rally. Okay, and then we're going to put it at the low here. All right, and let's do some analysis. Let's take a look. All right, I'm going to get rid of some of these lower ones because I don't feel the need to have them in this example. Okay, so let's take a look. If I'm going to go down to a daily time frame. If price were to do a 1-to-1 extension of the last bear market rally, we would expect price to go to 26,000. 26,236. Okay. If we were to do a 1-6-1-8, 32,884. If we were to do a 2-to-1 extension, we would expect around 37,000. And a 3 would be 47,000. Right? And given, you could say, well, I noticed that the last bull run was a 3-to-1 extension. Maybe this bear market rally will be also a 3-to-1 extension, which would give us, at about 48,000, which I might add, by the way, is a massive, massive resistance and area of confluence on the chart. Look at that. The rejection from 48,000 is what sent us all the way down to 17K, right? That massive rejection led this big push down, right? So that is a huge, huge, huge area of resistance that, again, what could we do? We could take our fixed range volume pull tool and pull it over through this range and see, what sources of confluence we have here. Where is the value area? So here we have the value area. So we could say that in this zone, we see that there's quite a bit of confluence. The 272 at about 40,000 is very close to the point of control. The value area low is right at the 2-to-2 extension at about 37,000. In this case, we see that this doesn't give us confluence on here, but we do have it as this last high, which we know that this was a really huge, 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 huge area of resistance, right? So again, just as an example to add some confluence, but yeah, this is cool, right? So if we're going to compare bear market rallies, this is just a nice way to do it, right? This gives us just an idea of like where we're at, If we get, that move up to here, we can say, yeah, we've really, this is a good aspect of that bear market rally, right? If we were to do, what would be something else I would think to draw? Yeah, I would compare those. I would compare, let's say, for example, this is the low. And we're going to go to a weekly chart. Let's say that is the low that's just been put in. That is the low for the bear market. If we were to do a 1-to-1 extension of our last bull market, so if we were to do this exact run, right, that would put us at 81,356. Now, if I'm correct in assuming so, I'm going to just add a little bit of confluence here. I'm just curious. We have a very popular channel. We'll go like this. Add this on here. This is on my channels tutorial. It is really, really, really just a super awesome tutorial. What was that? Draw. I'm going to go on the daily. I think this might have been it. Give me just a moment. This may take me a couple tries to get this exact channel right. I don't remember how I had it drawn. I know I have it saved on one of my other charts, but yeah, God, this is a really really cool channel, and I'm just gonna take like 2 seconds to explain why this is so incredible because I do want to end this stream soon. But I did the pull from here to here, up to here, and in by doing that, it gave me this high, right? So you have to understand, you could have had this channel drawn in July of 2021, and it would have gave you almost to the exact dollar the high that was going to be put in November of 2021, months later. Super cool. I mean, like, that is, there are few things that cool in my opinion when it comes to technical analysis. Okay, so great. This is exactly what I was going to look for. So we can see here, if we just take like a little zone, let's say, if price were to reach this, oh God, that's pretty soon. I'm not going to get so crazy about that. But the reason I wanted to draw this out is, you know, let's say, oh man, look at this too. If we were to rally up into here, you know, this would be a great area of this channel would be great confluence for a lot of that macro pulling that we just did, right? But like, let's say price, you know, we're, you know, gain acceptance back in. I maybe have to go to a weekly chart to do this. So the next halvening is March of 2024. So the next halvening is somewhere, oops, man, between somewhere in this time frame. So like, you know, let's say we have a bear market rally and we come back down, maybe not that, like this, and then come back down and we range and price kind of goes like this, and we have our halvening and we gain acceptance back into here and price rallies, right? We can use this channel and this pull, you know, as confluence to say, wow, look at this. You know, the 1,272 at around this time frame, you know, you can see like this is where that intersects, this is where this one intersects, this is where this one intersects, this one's where this one, you know, so on and so forth. So you can say, hey, if we hit, you know, let's say in 2025, if we're at about 100,000, I know that that's a massive macro area of resistance. Between that time frame, I am definitely going to be selling, right? I'm going to be looking to sell, I'm going to be looking to short, and that's my analysis, right? So that's kind of something you can think about. So again, just wanted to throw a little confluence on there to give you guys an idea, but it's just a cool way to use this tool, right? To compare how past rallies or past moves are to current ones. And again, like, you know, I'll do my macro analysis and I'll take a look at some of these bigger levels, but you don't have to just do it on a macro level. You can zoom in here and you know, you could again, like, you could say, well, how does this one compare to this one? And you could just go, well, hey, we had this rally from here to here, and I'm going to pull this down to the low. And, you know, let's see how those two compare and kind of draw from there. Or we could go to a, let's say, a lower time frame. So let's go to like the, let's go to the 4-hour chart. And we can say, let's see, what would be a comparison I'd like to draw from? I don't know if this is a great example, but, you know, one thing you could say, like, I'm going to pull this from the high. You could say, oh, the 1-to-1 would be there. So, you know, price found support at the 2-to-1 extension of this move down, right? So I did the pull from here to here, and I put it to the high because I'm curious to see. So the 1-to-1 put us at about 22, and the 2-to-1 put us at about, you know, 21,682, which is right where we found support. So cool, you know, that's just a nice added source of confluence. And as you use this tool, you'll get an idea for like what levels are important or which ones you like to pay most attention to and how to use it. So like, that's kind of a cool way to use it as well. I'd like to see a better if I would use it there. You know, you could say from this rally to this rally, like what would it look like if we were to see, you know, a move down, you know, from here to the low, right? That's not giving me the exact one. I'll just do here. You know, and you can get an idea of where the one-to-one would bring you and stuff like that. I think that that's a little bit of an exaggeration, but you know, you get the idea. It's just used to compare, and that's to me that's what's so cool about this, right? Is that you can use it to, you know, look at some of these levels and compare to say like where would we go if we did a rally similar to that, or if we had a retracement similar to this one. How low would that bring us, you know, in future price action? So it's a really fun tool to use. Um, there, the last thing I'll say is this: the fib retracement tool, right, and using it to have like an expansion on there. You know, that one-to-one, so like this is the one-to-one, and you know, so this is like the same thing as, you know, just drawing like, let's see if I can get this right. It would be from here to here to here. Oops, nope. It would be to here. Yeah. You know, so they give you the same levels. I mean, you can see what I did there. You know, they're the exact same levels. They're the same tool, but the most useful part of this trend-based fib extension, and the reason I wanted to share it with you, is how useful it can be in just comparing past moves to help predict future moves. I've used it so many times to do that, and what it does is it gives you realistic targets, right? In doing that, you can say, well, if it were to have the same rally as this is what we can expect. And then by doing that, you can give yourself a realistic expectation of what is possible on the charts. So I hope you guys enjoyed that. I don't see any questions here right now. If you guys do have any questions, feel free to ask in the Discord. As you guys know, I usually take weekends off, but I'm still pretty present in there at times over the weekend. So if you guys have questions, feel free to ask. I hope you guys enjoy this one. This is a very, in my opinion, it's a pretty low-key tool that I very much love to use to be able to compare, like I said, past price action to what is possible, or to give me realistic expectations of future price action. So enjoy the rest of your day, guys, and we will see you in the Discord.